Now, I want to ask you something, and I want you to sit with it before you answer. How many trades have you made in the last 30 days that you were truly proud of? Not profitable, necessarily. Proud. The kind where you waited, you observed, you let the market come to you. And then you acted with complete calm because everything was lined up the way it needed to be. Write in the comments where you're watching from and what time it is. I want to get to know you better. And if this kind of thinking is something you want more of, subscribe and like the video. It costs you nothing, and it means everything to a channel like this. If your honest answer is not many, or worse, none, then what I'm about to tell you might be the most uncomfortable and useful thing you've heard in a long time. Because here's what nobody wants to say out loud. Most people who lose money in the markets aren't losing because of bad luck. They aren't losing because the system is rigged against them or because they need one more indicator, one more course, one more strategy. They're losing because of something far simpler and far more brutal than any of that. They're losing because they're at war with the market instead of aligned with it. And I know what that war feels like. I lived it. For years, I was clever, impatient, and completely convinced that effort alone was intelligence. The market taught me otherwise, and it charged me everything I had for the lesson. My name is Jesse Livermore, and this is what I learned.
Before we go any further, if the idea that your own psychology might be costing you more than any bad trade ever did makes you want to lean in, subscribe, hit the like button. We're going to go somewhere real today, and I want you with me for all of it. Here's the thing most people misunderstand about trading, about investing, about money in general. They think the problem is information. They think if they just knew more, read more, analyzed more, the results would follow. So they spend their evenings studying charts. They subscribe to newsletters. They follow accounts that promise them edges, signals, setups. They build elaborate systems and then wonder why those systems keep failing them at the worst possible moments. The problem was never information. The problem is what you do with it when your emotions get involved. I was 17 years old when I first started reading price movements in a brokerage house in Boston. I was good at it. Good enough that the bucket shops, those small speculative trading houses where you bet on price movements without actually buying shares, eventually banned me because I kept winning. And I genuinely believed in that season of my life that I had cracked the market open. I hadn't. What I had done was master a small, contained game. A game with rules I understood, patterns I could read, risks I could manage. The moment I stepped into the real exchanges with real capital and real forces at work, accumulation by major investors, distribution, genuine shifts in sentiment driven by money I couldn't even imagine, I was humiliated, completely. I lost everything. And here's what I want you to hear, because this is the part people always skip over. That loss was not a setback. It was an education. The most expensive and most valuable one I ever received. Because it forced me to stop asking, how do I predict what the market will do next? And start asking a completely different question.
What is the market actually doing right now? And am I aligned with it? Most people never make that shift. They spend their entire trading lives trying to be smarter than the market, trying to anticipate it, to outsmart it, to catch it before it moves. And the market, patient and indifferent as it is, simply takes their money and moves on. You are not failing because you aren't smart enough. You are failing, if you are failing, because you are fighting something you should be following. And there is no shame in that. It took me years and multiple fortunes to understand it myself. Let me tell you what alignment actually means, because the word sounds soft and the reality is anything but. Alignment is not a technique. It's not a moving average or a trend line or a label you paste on a chart to convince yourself the market is going your way. Those are just descriptions. Alignment is something that lives in your behavior. It is the state you reach when your timing, your position size, your patience, and your expectations all match precisely what the market is actually offering you in that moment. No more, no less. When I finally understood this, my entire approach to trading changed. I stopped trying to manufacture opportunities. I started observing. I would watch a stock for weeks, sometimes months, doing nothing but studying it. How did it behave when the broader market was weak? Where did buyers consistently appear? Where did sellers take control? What was the stock's personality, its rhythm under different conditions? This is not exciting. I want to be clear about that. It is quiet, deliberate, often frustrating work, and most people cannot do it, not because they lack intelligence, but because they cannot tolerate stillness. They need activity to feel productive. They equate being in a trade with being in the game, so they manufacture positions in dead conditions and call it strategy. They click and churn and stay perpetually busy and wonder why they never get anywhere. The market spends far more time doing nothing than doing something. Most people cannot accept that. They see flat prices as a problem to solve rather than a condition to respect. But the trader who can sit through stillness without resentment, who can watch without acting, who can wait without anxiety, that trader has already separated himself from 90% of the people competing against him. There's a concept I developed over years of observation that I called pivotal points. Price levels where, if a stock crossed them with conviction and volume, it was likely to continue in that direction for a meaningful distance. Not because I said so, not because I predicted it, but because the market itself was showing me, clearly, unmistakably, which direction it intended to move. This is the difference between prediction and participation. I never made my real money by calling tops and bottoms. I made it by waiting until the direction was undeniable and then riding it with discipline. Being early in this game is indistinguishable from being wrong. The market does not reward you for being clever. It rewards you for being correct and staying correct long enough for the position to mature. And that brings me to something I consider the central psychological challenge of all trading, the thing that breaks more capable people than any market crash ever has: sitting tight. Once you're in a good position, a truly aligned position, where the setup was clear, the risk was defined, the path of least resistance was obvious, your job is to sit, to let the trade develop, to resist every impulse to take your profits early because you're afraid of giving them back, to resist every nervous instinct that tells you to do something, anything, just to feel in control.
I held cotton during a massive bull market in that commodity and endured constant pressure from people around me who thought I should lock in gains. It's already up so much, they'd say. What if it reverses? And every single day, the market was still showing me strength. Every pullback was shallow and bought aggressively. The trend was intact. So I sat. And that position grew into one of the most profitable trades of my career. Not because I was brilliant, but because I was patient enough to let it be what it was. Most people exit their best trades too early and hold their worst trades too long. Think about that for a moment. They cut winners because they fear losing what they have, and they cling to losers because they can't accept being wrong. The psychology is completely backwards, and it costs them enormously, not just in money, but in the missed compounding of positions that were right, that were aligned, that the market was ready to reward. I kept detailed journals for years, every trade, every observation, every mistake. Not out of sentimentality, but because I was training myself, teaching myself to recognize the subtle signals that appeared before major moves, learning to tell the difference between genuine strength and false strength, between a real breakout and a trap. The market repeats itself because human nature doesn't change. Fear and greed, hope and panic, these have driven prices for centuries. Once you learn to recognize their fingerprints in how prices move and how volume behaves, you have something no algorithm can replicate. The tape doesn't lie. It cannot lie. It is the pure, unfiltered expression of supply and demand, stripped of every narrative, every opinion, every headline that clouds judgment. When prices push higher on massive volume with strong closes, that's the market speaking clearly. When a rally comes on thin volume and closes weak, that's the market whispering its doubt. Learn to hear the difference between the shouts and the whispers, and you'll know when alignment is genuinely possible. And if you're finding this way of thinking about markets and money resonating with you, subscribe and like the video. This is the kind of conversation I want to keep having, and your support is what makes it possible. After 1929, after I made what people called my greatest trade, shorting a collapsing market and emerging with a fortune while others lost everything, I was called a genius, the greatest trader who ever lived. And I believed it. That was the beginning of the end. Because success, when it arrives without humility, is just a slower kind of ruin. I stopped listening to the tape. I started listening to my own press clippings. I made trades in markets I didn't understand because I believed my track record gave me permission. I held positions against clear signals to exit because admitting I was wrong felt like it would diminish what I had built. I confused my identity with my account balance, and when one started suffering, I couldn't let the other follow.
I lost everything. Again. And here is what that taught me. The real lesson underneath all the technical knowledge and all the market wisdom I had accumulated. Alignment is not a destination. It is a daily practice. You don't achieve it once and keep it forever. You wake up every morning and you ask yourself, am I aligned with what the market is actually showing me today? Or am I aligned with my ego, my fear, my need to feel smart? Those two things feel identical from the inside. That's what makes them dangerous. When you are genuinely aligned, trading becomes almost mechanical. Not in a cold or robotic way, but in a quiet and grounded way. You have criteria, you have rules, you have stop losses that exist not as signals of defeat, but as acts of intelligence, because you have decided in advance, clearly and without emotion, exactly how wrong you are willing to be. And that single act of defining your downside before you think about your upside puts you in harmony with the market's natural state, which is uncertainty. The market will always test your conviction. Always. It creates conditions specifically designed to shake you out of good positions. Violent bounces and downtrends, sharp pullbacks and uptrends, confusion precisely when clarity would let you act correctly. If your position is based on solid observation rather than wishful thinking, you can survive these tests. You don't need to be comfortable. You need to be correct. And correctness comes from alignment, not from confidence. This is the mindset shift everything else depends on. Stop trying to conquer the market. Stop trying to extract money from it through sheer will or cleverness or relentless activity. Start cooperating with it. Read what it's showing you. Wait for conditions where the evidence is overwhelming. Act with appropriate size. Protect yourself when you're wrong, and let the trade develop when you're right. When you truly make this shift, something changes in how money feels. It stops feeling like something you chase and starts feeling like something that finds you, because you removed the ego and the impatience and the constant noise that were blocking it all along.
Now, let me bring this somewhere practical, because philosophy without application is just entertainment. The first thing I want you to do, and this costs nothing, is audit the last 20 trades you made. Not by whether they were profitable, by whether they were aligned. Ask yourself honestly, did you take that trade because the setup was genuinely clear, the risk was defined, and the evidence was compelling? Or did you take it because you were bored, or anxious, or trying to make back a loss, or because someone told you it was a good idea? Most traders, if they're honest, will find that fewer than half their trades pass that test. The rest is noise, expensive, account-draining noise. The second thing is to develop what I can only describe as a waiting practice. Before you enter any position, ask yourself one question. Is the market actually ready to reward risk right now? Not is there an opportunity I could justify, because a clever mind can always justify something, but is the evidence overwhelming? Is the path of least resistance genuinely clear? Most days, the honest answer is no. The trader who can accept that answer calmly, without resentment, without immediately searching for an alternative, is practicing alignment. Third, and this is the one people resist the most, define your exit before you enter. Not just your stop loss, but your thesis. Know specifically what the market would have to show you for your trade idea to be proven wrong. And when it shows you that, exit, without deliberation, without renegotiating with yourself, without adding to a losing position in the hope that it recovers. The market doesn't care about your hope. It responds only to what is actually happening. And your job is to respond to that too. Fourth, keep a journal. Not to document your wins, to document your thinking. What did you observe? What did the tape show you? What did you feel before you acted? Over time, patterns emerge, not just in the market, but in yourself.
You start to see which emotional states lead you to make poor decisions. You start to recognize the feeling of misalignment before it costs you money. That awareness, built slowly through honest record keeping, is worth more than any strategy you'll ever buy. And finally, this is perhaps the simplest and most violated rule in all of trading. Never let one trade destroy you. No position, no matter how certain it feels, should have the power to end your participation in the market. Your capital is your voice. Protect it. Use stop losses. Size positions with humility, because the market will still be here tomorrow and the day after, creating new opportunities for those who preserved the ability to act on them.
I want to leave you with something personal. The trades that made me the most money over my career were never the flashy ones. They were never the ones I was most excited about, or the ones I talked about, or the ones where I felt like a genius going in. The trades that changed everything were the quiet ones. The ones where I watched for weeks and then acted calmly because the evidence was overwhelming. The ones where I sat through discomfort without flinching because I had done my work and trusted what the tape was showing me. The ones where I let profits run long past the point where my ego wanted to lock them in. Those trades didn't feel dramatic. They felt almost inevitable. That's what alignment does. It removes the drama. It removes the warfare. And in that quiet space, that space that most people are too impatient or too anxious to reach, that's where the real money lives. You don't need to be smarter than the market. You don't need a secret system or a proprietary edge or someone whispering tips in your ear. You need the discipline to observe rather than predict, the patience to wait for conditions that actually warrant action, the courage to act decisively when those conditions appear, and the humility to accept without drama when the market tells you that you were wrong. That's it. That's the whole game. Progress here doesn't look like a breakthrough. It looks like one fewer impulsive trade this week than last week. It looks like sitting through an extra 20 minutes of market observation before you act. It looks like closing a loss quickly and cleanly, without drama, and moving on. Small corrections practiced consistently compound into something real, into something lasting, into a different kind of relationship with money, one built on discipline and clarity rather than hope and adrenaline. The market is waiting. It will still be here tomorrow. The question is, will you be aligned when it matters? If something in this video shifted your thinking, even slightly, leave it in the comments. Tell me where you feel most out of alignment right now. Is it patience? Is it sitting tight in winning positions? Is it the discipline to do nothing on days when nothing is the right move? I read every one of those reflections. Subscribe to the channel if you haven't. Like the video if it earned it. And come back, because this conversation is just getting started.